So to give you a brief, Venture Intelligence is a database service provider. So the new interface will let you track private company financials and transactions as part of our databases. If anyone is interested, we would be happy to schedule a one-on-one demo where we'll show you how we are different from any other service provider anytime between 4 to 5 p.m. If you want to know more about this, kindly walk up to the registration desk and we'll be happy to set up a demo. Moving on to the panel session of the day, to start off with the first panel, we are all set to take stock of the private equity venture industry landscape with the help of 20 expert speakers. The inaugural panel, titled Macro View, will cover what can the PVC industry expect over the next few months, regulatory scorecard and expectations, rising importance of domestic capital, impact of geopolitical developments. Post that, the private equity panel at 12 p.m. and the venture capital panel at 2:30 p.m. will deep dive into specific issues relating to those segments. We will have plenty of time during the panel sessions as well as between the networking breaks, wherein we can network and get to know more among the people. We now take the opportunity to thank our sponsors: Technology Holdings, Invacent, TVS Capital, Motilal Oswal Alternates, Bharucha and Partners, O3 Capital, Resurgent India, Fundalogical and Fox Mandal for making this event possible. We also thank session partner Gandhi and Associates, associate partner PE Front Office and HR partner Zenith HR for their support. I would like to introduce the speakers for this panel. Ajit Kumar, Managing Director, Evolvence India Fund. Gopal Srinivasan, Chairman and Managing Director, TVS Capital Funds. Anand Prasanna, Managing Partner, Iron Pillar. VT Bharadwaj, General Partner, A91 Partners. Ashish Agarwal, Director, Resurgent India. Vivek Jha, Partner, Fox Mandal. I take pleasure in introducing the moderator of the panel, Vivek Kumar Jha, Partner, Fox Mandal. Vivek Jha is partner at Fox Mandal and Associates, one of the India's premier full-service law firm. He brings over 17 years of experience in a broad spectrum of corporate transactions. His expertise include merger and acquisitions, private equity, venture capital, strategic alliances, investments, joint ventures, contract drafting, corporate compliance, and regulatory advice. Vivek's practice focus both on cross-border and domestic transactions across various sectors. Vivek's service include deal structuring, entry and exit strategies, legal due diligence, drafting and negotiating term sheets and transaction documents, assisting in transaction closures, advising on general corporate compliance, and delivering legal opinions. Over to you, Vivek, and the panel.
Thank you very much, Sonal, for the kind introduction. Good morning, everyone. I'm Vivek Jha. I'm corporate partner with Corporate and M&A Practice Group at Fox Mandal and Associates LLP. And today, as you can see, as you may have seen in your agenda, the topic for discussion we have with us, with our marquee panelist, is the macro view. And during the course of discussions, we will have several reference points within the main topic as we unravel the discussions with our panel. I will request panelists to introduce themselves and the organizations they are representing, and then we will commence towards the discussions.
Yeah, good morning, everybody. I'm Ashish Agarwal. I am director in Resurgent India Limited. So Resurgent India is not a government company. It's a privately owned investment banking, merchant banking firm. We are Cat 1 merchant banker also. So we got the SEBI approval for the AIF 1 category fund also. So that's we have a corporate office in Gurgaon.
This is Ajit, the managing partner at Evolvence India Fund. We have been a very early entrance into the Indian PVC ecosystem since last almost 19 years. We have a kind of a hybrid model, part fund of funds and part co-investment and direct investments, which includes secondaries as well. Currently, we are on Fund 4. Thank you.
Hi, my name is Gopal Srinivasan. I represent TVS Capital Funds. We are a growth equity fund from Chennai and Bangalore.
Hi, I'm Anand. I represent Iron Pillar. We are a growth stage investor, typically invest in technology companies which are give or take 10 million revenue, and work with them in scaling the businesses beyond 100 million in revenue and profits.
Hi, I'm VT Bharadwaj, and I represent A91 Partners. We're also a growth stage investment firm, typically invest between 10 and 40 million in fast growing companies in India.
Yeah, thank you for the introduction. As you can see, we have diverse panelists today to discuss with us, and I'm sure it will be very insightful and useful from learning perspective, having their thoughts and viewpoints on the reference points we have today. So I will start. As far as structure of the discussion will be, for first 1 hour we'll have discussions with the panelists on various reference points, followed by 30 minutes of question answer sessions or any clarifications which the audience may have. So I will start the proceedings and put a reference point to the panel. As we know, yesterday, very off late, yesterday itself there have been announcement of results, and a new government will come into picture very soon. The discussion point is, what can the PE and VC industry expect from the new government? So we can start with you.
Thank you for pointing out that Thank you for pointing out that I'm the oldest member of this group. I think I always start off with Gita 33, Shloka 11. If it goes, remember it is Nimitta Matram Bhava Savya Sachin, which means, I become an instrument to shoot the arrow expertly in some sense, which I think is the role of private equity or venture capital as it is. We are only instruments, and we must try to shoot the arrow as expertly as we are capable of, because Savya Sachin is somebody who shoots an arrow expertly, right? So in that, I think all of these future trends, we should see only from that point of view, because that is really what is our dharma as VCP investors. So, sorry to do a context sitting here in my mind, that's how I thought about it. I think the word change with continuity has been used very often yesterday during the election analysis that has taken place. So I do not expect that any fundamental change will happen, because I think the developmental agenda which the last 10 years has seen will simply continue. What happens on the social agenda is not anyway part of today's discussion. But the fact that the global macro is in our favor, that China has gone to the lowest level of FDI in its entire history since 1993, the fact that India has got a decent GDP growth rate, the fact that even in a short time the bond funds have got nearly 7 billion as India got included in the index, the fact that the first quarter FDI was high, the fact that we had 79 IPOs in the first 6 months compared to 49 in the US, all of these things indicate where India is going. So I think what we should really see is change. Yes, some changes will always happen, even if this government had got a greater majority. But the continuity will be the main focus of the plank of India. And I'm hoping that many of the excellent work done by the IVCA and the industry associations in coming through with the agenda for the industry to basically unleash domestic capital, to make taxation more frictionless, to make SEBI regulations more oriented towards accelerating, because regulation is not a static thing, it is a continuous evolution. And I think these are the directions in which we will go. These three are very important directions for the country. Of course, we have many, as an industry, we have a list of constant issues, but we will always have seen in the last 10, 15 years that has been solved. And I suspect that's what will continue to happen. So evolvence is the name of a fund, evolution is the name of the industry.
Yeah, if I want to add to that, I would say one of the most important things from an industry perspective, as we have all learned to do investing over the last 15, 20 years since we started and capital has come in, is the important point that Gopal made around domestic capital. And one of the remarkable things that has happened in the public market side over the last 20 years is the relative importance of domestic capital and the relative importance of FDI. Which has actually diminished with time. It is still very substantial. It is not diminished by becoming smaller. It has diminished because domestic capital has become a very reliable source for public investing. And we are at a stage in the private side where we have to embark on that journey so that over the next 15 years or maybe 20 years, we move in that direction so that domestic capital and domestic investors understand the VC, PE, private class and start thinking of it as a part of their portfolio and become meaningful investors. So that the industry then is truly, I would say, sustainable and has a mission and serves its mission, which is really supporting Indian companies in whatever way they can. I would say on the regulatory side, that is what the direction has been in the last 15 years. It is not easy because everyone is learning. We don't know everything. Investment firms are learning, investors are learning, and the regulator is also learning. So I think the key is, as long as we know that's the goal, we will be okay.
Hello. So if you see the developmental agenda of the government, I think at BC it will be more aggressive now actually, keeping in mind the yesterday's results and all. And we are still having lot of gaps in the overall Indian market actually in the PEBC point of view. If we count in the number, I think we'll be having the way behind in terms of ranking of India in the PEBC industry. So in last 10 years, because the regulation came in 2012, last 10-12 years, this industry has become, I think, almost the commitments which have been raised. It is something 10 lakh crores of commitment, which is that to the private solicitation of capital. So I think this journey, I believe in next 5 years, this will be doubled actually, if I count in the number actually. So 10 lakh will become 20 lakh. And as he told, definitely the foreign money which is was major in the Indian PEBC industry, it might get a little slow, but our domestic capital is, I think, having a lot of options, and the government has also allowed now this PF funds also, they can also invest in the PEBC industry also. So lot of channels are opening from the government side, and in spite of it, our corporates, our HNIs are putting a lot of money actually. So this industry will not have any such impact on the growth of the industry. There might be some impact from the foreign side, maybe little slow. So this is my observation.
Ajit, your views?
Yes, I was telling somebody yesterday, one of my friends called from London and asked, what is the result of the election? So I told them, look, democracy won. Yes. So irrespective of whatever dispensation is in Delhi, I think given the country's status in terms of its current GDP, the macro growth, some of the points which Gopal has mentioned, structurally we should continue to grow maybe 6 to 8 or 9%, depending on domestic macro factors as well as overseas factors actually. Because overseas factors also very much matters these days. We will talk about it later. There is a particular point on that. However, if we have to compare where we are in terms of private equity, venture capital growth, vis-a-vis some of the other developed nations. You see, in the US, the private equity activity started way back in the 70s. And so it's almost more than, 50 years over there. And the investment into US private equity, US economy from the private equity sector is about $1.8 trillion. So that if you take into the current last year GDP of 27.6 trillion or something like that, it translates to almost 6.7% or something thereabout. Whereas if we take India's private equity or VC investment into the Indian economy, taking an average of for the last few years at $50 billion on a 4 trillion, it's about 1.25%. So we have a long way to grow the private equity industry actually. So there we need domestic capital, we need overseas capital, because domestic capital obviously there is a constraint, to a certain extent we can go, and that will continue to increase as we grow in terms of GDP and businesses grow, people make more money, that flow will continue. Whereas much more capital will be coming from outside. So for that, irrespective of the government, we need to have a cohesive long-term policy removing all the bottlenecks. We talk about regulation, there is a particular point again on the regulation we'll talk, but see even now, the most advanced economy like US also regulation keep changing because we live in a dynamic world. So regulation need to change. But nobody does in a retrospective fashion, which creates all the jitteries here, and also ironing out issues which are creating bottlenecks for the industry. Because private equity industry, whatever said and done, has got a multiplier effect on the economy. Whether it is funding capital to VC and private equity at various stages, or facilitating innovation, or employment, or generating tax revenues, or wealth creation. So in multiple ways, the private equity and VC industry, affect the economic growth of a country. So I think the government, whoever is there in Delhi, should realize that and come up with policies which will enable the growth of this industry.
Just a couple of small points to add here. So when we really look at how the government's rules and regulations or whatever they're going to change or not change can impact investments for people like us in the next 5 years. The three heads, one is like the macro, right? Is that going to continue to be steady? Second is sentiments. I'll come to that in detail. And the third is actually a long-term psychology of whoever is actually in power. When I'm saying long-term, the next 5 years. Now, on the macro, I don't think people typically have worry. India is doing well. There's a lot of, obviously there is issues, but generally the country is doing very well. So let's keep that aside. Assumption is that is going to continue. Short-term psychology. Many global investors, who are thankfully now Indian investors are actually becoming a bigger part of the industry, etc., which is great. But many global investors may find it a little bit, uncertainty, let me wait 2-3 quarters more before thinking about it. And I'm making a distinction between direct funds, because if you are a direct fund of a global investor who's got presence in India, you may actually find these uncertainties as opportunities to buy, versus if you are a global LP, like say think about a university endowment sitting in US, who was thinking about increasing their allocation to India, they may just wait for a few more quarters before doing that. So that's the distinction. That would have an implication on local funds who are raising global capital if you are dependent on that. The third thing is psychology. And that I'm specifically talking about. This is one thing which I'm most interested in. So there are various elements to psychology of the current government, right? Is it the current Prime Minister's last term? If yes, what would he actually do? Would he actually make a bunch of bold decisions which will actually propel India forward? If I'm a person if I was a betting person, I would actually say, yes, there is a chance that we may see some great long-term focused reforms coming out in the next 5 years. But then again, on the same time, there is psychology on the opposite side, which is you don't have a full majority, there is a form of coalition politics, there's at least a couple of parties whom you are to appease. How do you do this without creating problems? Do you actually end up in a situation where, we all have gone through years like 2009 to 14, where the government is kind of held hostage by many other parties, right? So hopefully that kind of stuff don't happen, right? So these are all the elements which would affect the psychology. But again, given where, it's not a full mandate, but it is still a very strong mandate. I think a lot of people, there is, happiness is always a function of expectation versus where you end up in reality. But if you really think about it, this is the second time one particular government is getting a third mandate to continue, like one particular leader in the country. It is a big deal, right? So I am very optimistic about what's going to come from the government side in the next 5 years, which will be positive for the industry.
Right. One very, I will have a supplementary question. We can spend a couple of minutes on. One very good point came, as all of you have pointed, that there has been rise in pace of domestic capital and domestic funding as well. So, will in long term it will balance out vis-a-vis the foreign direct investments or foreign funding into India?
No. If you look at other countries, that's what has happened. If you take even a country like China, which probably was the most active in dramatically encouraging risk capital flowing from pension funds, mutual funds into private asset class, they did it in like 7-8 years. Now we may not have, we will do it more organically, because I think the India private domestic capital story, like the Indian economic story, has been led by private businessmen and private family offices. So I think it will happen. Simply because at the end of the day, they are closest to the situation. Their ability to assess the risk and the reward is different. And therefore, the risk premiums that they will have in mind when they are thinking about the asset class will be different from what it is for an American investor. So I think over a period of time it will happen. But it will take time.
It will take time.
Could I add to,
Please.
Could I add to this? Could I add to this? Let's take two angles. One is, let's extrapolate the current trajectory, and let's also fold in the future. So if we extrapolate the current trajectory, starting with basically some banks, HNIs and family offices, there has been a very, very large inflow of insurance money right now into the sector. Plus, I think excellent organizations like SIDBI's FFS or NIIF or Nippon Fund of Funds, which is, I think, institutionalized capital. HDFC also has one. That is, I think, will only keep growing. More insurance is growing at whatever, 10-15%. Insurance pools are growing at even larger number. So that is, I think, an automatic thing that will take place. The fold in the future is basically, if you look at essentially the fiscal deficit, and the current account deficit, it's narrowing as a percentage of GDP. Automatically, it means there is going to be surplus monies in the economy. Today, for example, EPFO NPS pool is roughly about 21 trillion rupees, out of which is zero allocation. We talked about, and if you take endowments in India, there's no estimate formally available, but let's call it 50,000 crores. So maybe 22 trillion, large endowments, because you don't have, you can't take small endowments for this purpose. So I think that will be the folding in of the future, basically these pools coming into the system as more and more capital becomes available. I think there's one philosophical change. When I was, 30 years ago, I was the chairman of some Computer Hardware Manufacturing Association of India or something like that. And I remember going to a very wise man, Mr. D.R. Mehta, who then became the chairman of SEBI. And I told him I was so frustrated. He said, young man, I understand your frustration and your ambition for India. But our customs department is designed to keep things out. You want the customs department to help you to take things out. This is the exact opposite for them. So our income tax department today is only designed to catch you. It is not designed to help you grow your business. So I think that similar mindset change that has come to customs, obviously, has also to come to our income tax mindset, because therein lies many, many issues of friction which manifest themselves in a Vishwarupam. But the Brahman behind all that Vishwarupam is actually the mindset of the tax department.
And since Gopal has mentioned it, and I think that mindset is also linked. I know we are going forward on a question on the regulation side. See, because how should a regulator respond to bad behavior, right? There is a historic mindset, and I would say almost a colonial mindset, where basically the way you respond to bad behavior is to make that kind of behavior impossible and assume that everyone is capable of bad behavior, and that's how you design the rule. There's another one which says, hey, let me improve the system to punish that particular behavior or that particular action, but let me assume that 90% of the people broadly want to follow the rules, and let me design rules like that. So it's the same mindset, the income tax mindset, the customs mindset, also finally is also the regulatory mindset, right? And saying how should, because the challenge often for our regulators, and it's just not unnatural, is that in the pursuit of regulation is not the lowest common denominator, but the highest possible denominator. Right? That's the way they think about regulation. And often the work that Gopal, many other people have done on the regulatory side on IVC, etc., is to just explain to the regulators, saying, don't assume that everyone is a thief. And think like, suppose people are behaving normally, how do you create regulation? And then of course, deal with exception as exceptions versus creating a rule for the exception.
That's a very important point, right? And ultimately, if you believe in the idea that everybody responds to incentives, right? The senior people in the regulators, their incentives are, I have caught the thief, or I have caught all thieves, or I have caught all innocent people, including thieves. That is the incentive. There is no incentive to say, boss, आपने इसको क्यों पकड़ा? इसका कसूर क्या है? वो तो पूछते नहीं है. Instead, we basically say, oh, fine, I have bombed all of Gaza, now I will finish Rafah also. The world does not approve of that. The world is disapproving of that. So the world is telling Israel, guys, we don't like you anymore if you behave like this. So the same thing has to come in our mindset for regulators, saying the incentive to a senior regulator should be to follow the mid path. When this Gita says, Yukta viharasya aharasya yukta chetasya karmashu, always balance, balance, balance.
If I may add on to this, see, basically, it will be the opportunity, the regulation, the risk and reward. If there is continuous above average economic growth in the country, the opportunity set will substantially increase. And that will bring in more capital. If the regulation facilitates investment into the PVC ecosystem alternate side, removing bottlenecks, and that will attract more and more capital. Then at the end of the day, any investor will look for risk and reward, whether the return potential is commensurate with the risk they are taking. So I think in all that count, we are well positioned. It will continue to happen actually. So domestic pool of capital, when we started way back in 2004-05, in the first, there were hardly any private equity firms there. We were struggling to invest into a manager with second fund. So few funds were there started by the institutions, the UTI, the HDFC, the ICICI, etc. So, and then we had, very, very bad period of 2007, 8, etc. So we have gone through all those challenges. And at that time, there were some retail investors participated through some of the, like JM and ICICI, etc. And all those investors, one, the distributors charged 5-6% upfront, plus the investment didn't do well. All the retail investors suffered. And the retail investors basically kept away from the market. Now, over the last few years, when VC started making good money, we started seeing more and more inflow from retail as well as institutions, as well as, organized family offices into the, pool. That will continue because we are doing much better now. So I don't think there's any issue in domestic capital. As in the public side, more and more capital will come into the private side.
So if you see that aspects are there. So one side, you see the after regulation, almost 12 years are completed. So there are almost 2 cycles which are completed of the funds. Those have started very early, and people have seen returns on the money which they have invested. So the people who have tested the good returns or they have seen the entire cycle of this fund or industry, they are very much keen. They are allocating more money, more funds to this industry. But the only one challenge which is there actually, which is impacting, I'll say, the investment in this industry, we see the exit route actually, the exit route in the sense, we see that there is no secondary market, organized platform, organized system in the country. So there are many investors, like Yaji Gopal told, initially the banks have supported a lot actually. We are, in Resurgent India, we are dealing with the banks regularly on various fronts. When we are talking to them about the AIF industry, so practically if you see, they are pissed off actually. Nobody has got any opportunity to exit from the investments whatever the investments are lying on the balance sheet. So therefore, yesterday I was meeting with one of the MD of the bank. I asked from him that what are your views about the AIF and all, although RBI has come out with the circular 3-4 months before guidelines. But he said, we were keen to invest further and all, but whatever the investment we have made, we are not aware what to do actually. We are just piece of paper actually. So if you see, we need to, I think industry, IBCA or the government also, we need to work out something where the people who want to exit from the investment, they, whether it's a haircut or whatever may be, but they should have the opportunity to exit. Because nobody knows when they've invested for 8 years or 10 years, this money will be required or not required actually. So this is an important part where I think this can be solved. Many of the investors, those are not coming in the system, they will also invest in the this instrument actually.
Just to give me one more data point over there, like in the US in 2008, the investment into private equity venture capital has been about 3 trillion. And in 2023, it has been 13 trillion. Out of this, about 60% plus is the capital is from domestic, investors, institutions plus individuals. I think, if US can grow, we can also grow that way. So, we are small, young. So, the potential is there very much.
Could I add to this what he said? I think it's a fantastic point what you said. I just want to add to it. So, if you look at it, this SEBI themselves with the most recent liquidation regulation have basically talked about the fact that they want you to solicit bids for a 3/4 majority extension when you hit the end of fund life, right? And therefore that begs the question, how exactly would you do that? So one possible suggestion can be some kind of regulated market for unlisted securities, perhaps even those only owned by AIFs or AIF units, right? Using the RFQ mechanism which is there today for unlisted debt. So at least there'll be a very large level of transparency, and we can probably use the accredited investor mechanism. It's also a chance for us to smoothen out the process of AI. That's a different question. Is to basically maybe use that mechanism to say, you can actually use the RFQ so people can say, listen, these securities are available. We can prescribe a minimum disclosure in the IM without making it a DRHP. So something like that, I think, is something we should think about as a country, as to see how do we create and address this issue. And maybe when you do the liquidation funds, it's mandatory for liquidation funds to actually put out their RFQs in terms of onto this platform. So and these softwares are easily available, like Tiger. So many companies offer this RFQ platforms. So just a thought.
You are right, sir. You are right, actually. But I think there is need of, I think, system where the settlement should be, I think, done through the organized system, actually, where the government should take the responsibility. Because you see in the debt capital market also, the bond market, actually, what we have seen, we are always discussing since the last 20-25 years, the liquidity is a problem. People who invest, they don't get out from the investment because there is no secondary platform available. But in 2022, the SEBI has come out with a regulation where they have allowed these OBPP platforms to register to with the organized system, and the settlement is happening through the settlement with the government clearing house. So there are a lot of confidence is there whenever anybody is selling. It doesn't matter whether it's on the premium or it's on the haircut actually. But the confidence, the trust of the investors is there that whatever the security they are selling on the platform, they'll get money timely actually. So I think this is needed, or SEBI can come in the picture. I think industry will help, the stalwarts are here. They can, I think, push for this thing in a very hard manner. This will be done because definitely it has to be done later or sooner actually. So this is my take on that. I think the people are there, they will definitely comment on that also.
I'd like to add on over there. See, again, this is evolution of the market. We don't have an effective secondary market as of now. If there were good secondary market activities like in the US, possibly these tail end fund issues could have been addressed, which possibly will happen as we move forward with more and more AUM under the asset class. So one is on the regulation side, making it easier for tail end fund life issues rather than forcing liquidation. And the other one is private market operators coming together, some fashion or the other, which Gopal alluded to, coming and promoting some mechanism whereby this kind of illiquid assets can be held, rather than, other parts of the world, they appoint a liquidator to monitor the asset and, get the money and distribute it out. So that's also an option, basically. And if SEBI wants to put in some mechanism to monitor so that fair play is involved, that can be also done as well. Or possibly somebody could come out with a fund structure where they buy all this tail and bond and provide liquidity or continue with the operation, and as and when the distribution comes, distribute it back to investors. So there are various mechanisms, and again, it's an evolutionary process, basically. Yeah. We will see many of these will be coming into fruition, as we move forward.
One aspect about that which I wanted to kind of say, again, we are all very creative people. But one fundamental thing which I say when we talk about, there is a ton of global capital available for creating this liquidity, right? When I talk to some of the biggest folks who actually are in this space, they have two sets of challenges. Number one, when they come to India, especially if you have AIF structures, it's like much more easier. If you have a Delaware fund, to kind of do a secondary, if you do want to do a continuation vehicle on a Delaware fund, if you want to kind of take out certain assets out of a Delaware fund with a secondary fund, and secondaries also, they do a lot of structuring around it. Unfortunately in India, due to specific regulations locally, because the regulator have not even thought through this entire process. So instead of probably going and try to kind of create our own kind of scenarios, like how would a large secondary fund globally do the same thing in a Delaware fund? Is that going to be possible to do that in an Indian AIF? Today it's not. So there are multiple regulatory hurdles in making it happen. So I think instead of that, if we kind of go and, hey, here is an India-specific solution, many of these global pools of capital then might as well find India-specific capital also for that. Because most of them, they have a playbook. They're not going to change their playbook just for India, at least yet. Right? I don't know, 10 years down the line, they may, because it's so big and they may raise an India-specific fund, in which case their playbook may change. But today, you go to them and they say, oh, you have a fund outside the country, easier for us to kind of provide you liquidity. But if you have a fund inside the country, very difficult, because all the structures which you want to kind of have, like where they would take some part of the capital upfront and then the LPs will get more later, those cannot work in India, unfortunately. So it's actually, I think part of it is regulator figuring out things. Second is, I think many times people do forget this fundamental aspect due to our currency. And there is a currency lowering. So rupees, you do make money. Sometimes dollars, you don't make money, which actually make the GPs hold assets longer to make the basic returns in multiples, which they want to kind of. So it takes time to kind of build businesses in India. And that's a challenge. So fundamentally, again, I'm actually seeing a lot more global investors now looking and saying, hey, look, I'm happy to kind of lock in money longer term in India because I believe in the India story. But then you need to have, again, structures around that. So that could be a simpler solution rather than trying to kind of complicate things, like, more longer term capital for India, domestic or global, and just adopting global structures into the country, which is well understood globally.
Right. So, okay. Moving on to another reference point for discussions. As we know, very recently, Finance Ministry also pointed out certain risks to our economy in form of geopolitical tensions that have been doing round, fluctuations in the petroleum prices. So what are the international issues you will watch out for in this relation? For example, like protectionism, like you have pointed out, currency devaluation, for example. So what could be those international issues you will watch out for?
At least on the geostrategic side, I only see opportunity and less risk. And what I mean by that is, I think there are two things, metrics at least I watch very carefully. One is the absolute dollars of IT services exports. And one of the things you will see now is that it has crossed the amount of oil that we import. And therefore, given likely what is going to happen to oil pricing over the next 7-8 years, which is adoption of EV, just reduction on oil demand, etc., I actually think one big risk on currency, on deficit, current account deficit is actually going to go away if I take a 10-year view. The second risk, the risk I call it a risk and an opportunity, is really around China, right? And then the reality is that the way China has behaved, both with capital, which is investors on private and public side, as well as with how they're thinking about their behavior with multinationals, gives a big window of opportunity. But this window of opportunity is available not only to us. I think it is available to many countries in this part of the world, be it a Vietnam, be it a Malaysia, be it Bangladesh. And there I think it is about how quickly and how courageous our entrepreneurs are in terms of feeling that, hey, they can go ahead and compete to the best, kind of do what happened in services in other areas and say, have the confidence and courage to make those investments and do it. Second is there on the regulatory side is how do you integrate with some of the supply chains so that you're able to move some of that, to India. If you try to replicate complete end-to-end supply chain outside of India, it may be a tall aspiration, and I don't know whether we will get there. The faster way to do it is how do you be nimble around it. And there I think honestly it will be for our bureaucrats and for some of our other people in the supply chain to actually be very nimble. They actually need to literally be traveling, understanding these markets, what's moving to Vietnam, what's moving to Bangladesh, what's moving to Malaysia, what can I do? And unfortunately, the answers for this will be sector specific, which means you have to build that sector specific expertise in various parts of the government. The answer for textiles and shoes will be different from electronics, and it will be different from semiconductors or whatever the aspirations for India are. And how do you have that flexibility? So that is the learning which has to happen, both for Indian entrepreneurs. I think Indian entrepreneurs are also learning, but they're learning very fast because they're going and they're seeing and they're watching and reacting to it. I think some of it, therefore, I'm quite excited by. I think, but it'll be a huge opportunity, at least on the geostrategic side, in terms of actually, making for India and the world. And the third thing is on capital, and I think capital. I remember many years ago, I remember seeing an interview, and this was after the 1991 when South Africa elections had happened, the first time elections that happened in South Africa, and a journalist asked one of the large LPs, I think institution based of the US, saying, will now capital come to South Africa? And he had a very interesting answer, capital doesn't come to a place because the place has become good. It comes because it is secure and there is a return. And therefore, and one of the things we have done reasonably well, if you take a 35-year view of India, which is if you had invested in India in 91, 92, the reality is on dollar returns, we would have been the second best public investing market in the world after the US NASDAQ. That's like a 34-year return, which is very impressive. So, and it is possible to take the money out, as they would say. So how do you continue to secure some of that, right? And as long as you do that, capital will keep coming in. So capital, I'm not worried on the geostrategic side. I think manufacturing is very nuanced and requires cleverness and application of mind. I think on services and oil, I'm the least worried.
I could add to what he was saying, and I think he said it very well. For changing macroeconomic environment is unchanging because it is always changing. So therefore, the only thing we can do is to find opportunities. Our job as fund managers is to seek opportunities everywhere. I see three big opportunities. Yesterday when I was coming from Chennai, I remembered always to fasten my seatbelt. The reason is because of climate change, now air turbulence incidents have dramatically increased. So to me, the biggest macroeconomic or global challenge is really that of climate change. And hence, there is a huge opportunity in India to basically be at the cutting edge of that change, whether it is going to be in green hydrogen, small modular nuclear reactors, or whether it's going to be in hybrid engines versus EV engines or hydrogen ICE engines or whatever. I think the opportunity set in this country because of climate change is massive. So I think the biggest problem has the biggest opportunities. Secondly, during the colonial periods of the Mughals and the British, India was the most prized asset in the world as a colony. There is a reason for it about the culture of this country and the way we basically in our own Purusharthas put dharma, artha, kama, moksha. We put artha right there in front. In fact, my Vedanta teacher says only Gujaratis and Rajasthanis are true Hindus because they put money earning first, right? So basically in that sense, India is the most attractive location for the world today And therefore, we must exploit that very well, our entrepreneurs. And third thing is, Indians are going abroad. Because of the second, money is coming in. Because of the third, Indians are going abroad. They are told for this 400,000 German short-term guest worker visas which came last week, it's expected nearly 30 to 40% will be taken by Indians. The first Israel workers are Indians. So in addition to my two friends living in MENA, right here, and all those living, VT's friends living in America, right? I think Indians are going abroad, so Indian entrepreneurs should be going all over the world chasing these people and building businesses. So this is just opportunity, and even more opportunity. And India is the reason I talked about the colonial point is, therefore money will keep coming. India has always been the most attractive place for 1,000 years, nothing new.
I think digital will play an important role actually in this. The AI regulation is one of the aspect which how the India will take it and how the other countries are taking this regulation and how it will impact the overall growth of the countries actually. So from my point of view, I think AI regulation and innovation, these two things will also have impact that how the governments or the regulator is taking up in future. And I think these things will go fast actually, will be having the better regulation, then definitely a lot of money will be attracted towards India actually. And this will also impact the job market actually. So we are discussing on the employment side actually. So how the AI will come in the picture in the reducing the job market or enhancing the employment actually. So these things I think we need to debate and discuss.
Yeah, on geopolitical risk, I think we are currently living through one of the heightened geopolitical risk time. So many flashpoints in different places. Don't know where it can possibly flare up, which obviously has major repercussions on economies like India. The commodity price increase, especially oil, has been discussed. So will be other commodities. But these are not within Indian administration's control, or so this is beyond our control. So these kind of issues may happen, but what we see is lack of good leadership in the Western world over the last 15-20 years. And the quality of multinational institutions are all adding up to these issues. Now, even after the US election, whether this is going to improve, it's a big question mark. So, in a sense, we have to live with these uncertainties. So, how we will insulate ourselves, insulation is difficult, but to the extent possible, mitigation could work, whichever way, whether it is through alternate energy or, promoting our own manufacturing. The government has been doing a far better job through the PLI scheme there, but what I gather is that on the PLI scheme, or put it in a slightly different way, China plus one of the points of a China plus one or diversifying away from China. I think so far the biggest beneficiary has been, Mexico and Vietnam, and to a certain extent Brazil and Indonesia. We are benefiting. We have become the second largest mobile manufacturers, but what I gather is Apple has been given certain special waivers in addition to the PLI scheme. And the IT and hardware manufacturers and pharma manufacturers are asking for more allocation under the PLI scheme. So, government has to come out and open up more and provide more soaps to the industry so that not only the government but private capital will continue to come onto the manufacturing area. So whereby exports will increase, exports has been increasing, which will address to a certain extent the current account deficit and pressure on the rupee. And going forward, I am of the view, currency has got various, layers of, determinants, geopolitical, macroeconomy, anything political, so many things. But considering where India is today, I am of the view that in the long time, Indian rupee should strengthen. And whenever we do financial modeling as PVC guys, we all figure in 2.5 to 3% diminution of currency, when we underwrite any investment. Why 2.5% to 3? Why not 2? Because companies with the domestic revenue, we provide a 3%. Companies with where they have export revenue stream, we provide slightly, lesser diminution actually. So in our fund one, our average exchange rate is 39.9. Where the currencies you can imagine, where the dollar returns are. So that kind of a scenario, investors, especially outside investors, resist. They say, okay, you would have made money, but we are not making any money. The Indian rupee would have made money, but as a dollar investor, we are not making money. So if we have to get more and more capital into the country, these kind of issues have to be ironed out. And there is no quick fix solutions for this. It will take time. It's an evolutionary process again. Yeah, but geopolitically, we are in a very, very bad situation. Hope situation will improve.
Right. So Anand, can we quickly have your viewpoint before we move to the next
we need to run
point
to
of discussion?
So quick things. Number one, India last year was around $2,700 per capita income with 59% domestic consumption and a young population which would actually get to 1x of dependency ratio only in 2100. That is 70 years we have in front of us to get rich before we get old. If you compare this statistics to any other emerging market, I would say India is a very different emerging market than if you think about Japan or Korea or China or Southeast Asian countries, etc. They all did, when they were at the similar stage, they were in their 30s in terms of domestic consumption, in 60s and 70s in terms of export and infrastructure investment to kind of like drive the GDP growth. There's only one country in the history which has actually been very similar to India. 1956 US was exactly the same GDP per capita as India in 2023. 60% domestic consumption like India's 59 last year. And due to baby boomers, etc., they also had a 75-year friend run before they get old, before they get rich. So the only thing which we pretty much have to do is not to upset the apple cart. Like, we are to just deliver consistency. If we can be the beacon of consistency in a choppy world, and the world is going to be, we are all hoping for the world going to be less choppier, good luck. The world is going to be more choppier. In this choppy world, if we are actually a beacon of consistency, we have made it. 75 years down the line, we'll come out as probably the most strongest country in the world.
Moving on to other discussion point, while we have briefly touched upon it with reference to China. So a lot of global fund, including private equity and venture capital investors, are keen to diversify from China. From Indian context, are we in a position to take advantage of this from capacity building point of view, assets point of view, as well as resource point of view? How does it play out vis-a-vis India?
I can actually add that point because it's something which we were discussing with a large pension fund literally like yesterday night in US. So if we are expecting all that money to flow into India very fast, no, it's not going to happen because it took a long time. I was in China, investing in China in 2008 when it was a very similar time period. It took a good 6-7 years for people to really get used to the country. Many trips, many of these large pension funds, etc., they will start with 1 check, 2 check, 3 check. So that process, it'll take a decade for that money to kind of eventually flow into India. Can India absorb it in a decade? For sure. That opportunity is there. Number 2, which is actually more critical when I talk about the money from China coming to India and opportunities, it's not about the cash, it's also about, you touched upon the manufacturing piece. So one thing which I did not have that insight, but I was sitting down with some CEOs of European companies, and they just gave this interesting 2 pieces of data which I took away from that meeting. Number 1, he said, you're talking about whether I'll go to Southeast Asia, whether Vietnam, Malaysia, Thailand, Indonesia, etc., to set up my China +1 manufacturing plant. If I have a chance, I will not do that in those countries, I will do it in India. Just because Why am I going there? It's China plus one. And guess what? China's influence will be the highest. These Southeast Asian countries, their influence on these countries. So if I am running away from China for China plus one, the place to run to me is either West or India, not another Southeast Asian country. This is from the horse's mouth. We have to just make our laws, regulations, etc. conducive for these people who have an incentive already to come into our country and build their manufacturing facilities. The second piece for them was also, this is a big market. None of those countries are a big market, right? You know, the mobile phone example which you said is a great example. The third thing, I did not know this data. 6 years back, India was nowhere in the map of mobile phone exports. So we talk about all the Southeast Asian countries manufacturing and exporting. Last year, we just crossed into the number 3rd position, and the next 2 years, we will be the 2nd largest exporter of mobile phones after China. So can we do it? Absolutely, we are doing it. Just try to keep up the work.
Right. Any other views on?
Oh yeah, I think the problem here is, currently there is no single country can manufacture anything in its entirety. We are much more interconnected actually. When China has been making Apple phone, the components come from 15 countries and they assemble it together. Some parts will be manufactured there in China as well. So we are in a much more interconnected world. So what happens is, if India has to increase the share of output, manufacturing output on any of these IT, electronics, etc., we need to be cognizant of the tariffs on intermediate goods. In India it's still high. We need to reduce that. If we reduce that, more and more people can import those kind of things, some domestic, because over a period of time, the Indian ecosystem also will develop. Import will reduce over a period of time. But they need to promote that so that we can, the Make in India campaign can become much more, strong. So again, it comes back to the government. So there are a number of issues, regulation, and manufacturing related. So all this will open up opportunities if the government, become more of an enabler than putting a little bit of a spike here and there, basically.
Yeah, if you see in China, scales are very huge actually. So it is not like that China plus one is there actually. But there are certain industries where the cost advantage is there actually. So definitely the investment which is coming to India, like mobile, we have also reached to third largest player in the world. But we see overall it will not happen that the money which is coming to India, it will be like that only, because China is also now figuring out that what are the challenges in that. Another, the cost of funding actually. If you see in India, we are having the 6.5% repo rate, and the cost of setting up the need of setting up any business actually is very, very high in terms of debt side actually. So how we can figure out that aspect, although it is growing in the other part of the world, but still the cost of funding is a major concern also, where you need to see that how it can be competitive in the world, where most of the investors who are looking to invest actually they should see so the money can come to India, but definitely the cost of funding is another aspect which need to be seen, because the large plant, large scale of investment has to be done. It will come only when we will be, I think, competitive in the cost of funding actually.
I was really thinking whether I had anything to say, and I'm still not sure. So basically, I think you are asking a multi-decadal question. This is not a 1-year question or a 5-year question, right? So in a multi-decadal question, the answers will be different because they will be deeper causalities, second, third order causalities rather than effects. So in my mind, 3 things strike me. If India wants to become super attractive for the world, it has to first become super attractive for itself. Right? That's very, very important. And we have 3 very important challenges in front of us in my mind. The first is, for our country to grow, we need third order democracy. It is the only large nation in the world where there is no local government. Only large nation in the world. We talk about China being an autocratic central completely untrue. The provincial governments and the city governments in China are super powerful. Korea, Japan, Taiwan, US, you name it, it's so. We are the only single country in the world where there is no local government, elected local government. Second is, what government is doing and this industry is doing on talent development is great. India's Got Talent is not a reality TV show, it's the real show of India. And that is what will sail us through everything. So hopefully that will keep changing at the same speed, whether it's university system, and this is a constant debate. It's in good hands. By the way, I kind of feel, I'm sorry to disagree with you on this, our regulators in India know exactly what the world does. There's nothing they do not know. Never underestimate the Indian regulator. When somebody like Anant Narayan is the whole-time member of SEBI who's worked for 10 years in Deutsche Bank and 10 years in Stanchart, you can bet, and Madhavi Puri Butch, who basically was running ICICI securities, they know what the world does it, but it's a complex country, so it often appears that what you see, it appears that when I don't agree, I agree with you fully on that, but it's a complex world when you sit inside and in the room. So I think the third thing I would say is, if you want to be most attractive right now to the world, India should make sure we fix our problem in terms of strategic minerals. This is what the world is drooling about. Whether it is basically moving our fast breeder reactor to thorium in the next 5 years, so we can produce as much energy as the entire world wants, whether it is making sure the lithium mines in Kashmir are activated, whether it is using some clever geopolitics to seize some germanium or some whatever anium that is, I'm very poor in these things. I think that is something that's going to become very, very important in the entire world. Today, if you go to EU and you go to the EU strategic conversations, which I don't go to, but I happen to be part of in some role that I have with the Dutch government, is the only conversation is about who will have strategic minerals in 10 years, not even water. Because once you produce energy, you can produce water. But you cannot produce strategic minerals. So I think these, I'm just taking 3 examples. I'm not saying these are the most important 3 or the only 3. But these are the kind of things we should do. Rest will sort itself out. We have to believe in that we have, our great people in this country. As Swami Vivekananda once said, today's atheist is the one who does not believe in himself or herself, as the case may be. And I was just counting in this room, there are about 80 to 90 people. I counted about 10 women. Right, which means clearly something like 30% shortage of women is there, which means that much of talent is being suppressed. So to me, this India's Got Talent is the story of India. Usko saaf karo, ठीक karo, sab ho jayega. Usme pragati ho jayega, to India aage badega. That's how I kind of think about it.
Just to supplement on your the quality of regulation, I think we have no doubt the quality of regulation or regulators are bad in this country actually. Sometimes we feel it's getting a little bit over-regulated. See, but then what happens is even in the well-developed market also the regulation, it's a dynamic world. It evolved, it evolved, take the evolutionary processes that even in the US, regulation keep changing. So like for example, I'll give you, in 2000, the US had about 6,500, close to 6,500 listed companies. Currently, it's about 3,800. The reason is many of the investors, they take the company out of the public market because of the issues with compliance and regulation. So it's not only the problem in India, everywhere these problems are there. And also, if you look at some of the other markets, I think our regulators have been doing a phenomenal job. And also some of these asset classes, etc., is relatively new for them even then. But we keep complaining. But our intention is that, we get a much more, flexible regime so that, the industry can thrive. So, we should not walk away from this conference that, the regulators are bad and, we have complaint and, please.
What I was saying.
Yes.
Okay.
In a nice pithy way, it struck me. I was listening to him speak, right? Our solutions are the regulators' problems, right? Their solutions are our problems.
So the floor is open. If the audience has any questions or any clarifications, please feel free to ask panelists.
good morning, panelists. My name is Surya. I co-founded a company called Zoop for a pet care industry, which is having a vision to become a unicorn in the petaverse down the line. And coming into the question, like you said, that there is a simplicity which needs to be in place in this whole macro funding scenario for the country. I've seen a podcast from Dr. Subramaniam Swami down the line a few days ago, where you are saying that the way we are having our finance aspects taken care by the government, probably down the line in 5 years, we will be hitting a very huge recession. And the only way to come out of that recession is to have the income tax totally waived off. So how do you see about it, and how do you see about it, and what are your views about it? That would it be a way to really take care of the macro funds, and the way you thought about the simplicity would prevail down the line? This is the way to go, or what are your viewpoints?
I'm sure others have something to say much better than me as well. I think only one small thing, right? If you just stand back and reflect at the state of the world today, right? The state of the world is clearly that every country has got its own model. For example, in America, it's a very diverse country. They're unified by one single idea called dollar. I want more money. Nothing else matters. They're socially repressive as a country. If you take America's regulation, I would say it's awful. No health, no education in a country of $25 trillion GDP is awful. So we shouldn't even compare with countries like that. So the thing I think we should think about here is the role of government, as we get more wealth across and more diversity between rich and poor, is more and more important. Do you really think that climate change will get funded by private sector? No chance. It has to have the government will. Whether, I think one of my friends here spoke about priority distribution not being available in India. Some people can get out first before the LPs. I have good news for them. It's coming next month in SEBI or next 2 months in SEBI regulation. But the key thing is, the role of government is becoming more and more important when there is wars across the world. Who is going to defend this country? Who is going to solve climate change kind of problems? Who is going to, Mr. Modi might not have done very well in the election, but 800 million people getting food, getting gas cylinders, whether it's Mr. Modi gives it or Mr. Rahul Gandhi gives it, is not the issue. The issue is there's a strong role for government to lift India out of poverty, to keep global stability, to solve problems like climate change. And boss, paisa ke bina kya hoga? Isn't it? You say, that's, I think, what we need to think about, right? There is a macro world, and that needs money. I know Mr. Subramaniam Swami's gift of intellect and speech is something I'm not even 1% of, so I cannot say anything against him. But I do think that the government represents the collective will of the people. And if the people do not have ability to spend, then this American kind of model, where 40% of the population is discarded to the trash heap of the country, should not happen in this country.
One simple thing to kind of add to that aspect is also, look, the earlier points which you just mentioned. There is a large opportunity. It's a growing economy. You mentioned about becoming a unicorn, but a real billion-dollar value business, right? So private valuations can be anything, but if you can really build a strong business, and if you are a founder of anywhere in the world, if you look at India and say, hey, look, this is a country where I have a good runway to kind of do that, the answer is an absolute yes. Then the question is, how do you do that? Whether you want to kind of do it in a very short form by trying to kind of find a shortcut and somebody giving a valuation versus like long-term value. And long-term value creation opportunity is definitely there in the country. Valuation is a matter of sentiment.
I will ask, why only income tax? What other taxes? If you are removing income tax, then you should remove other taxes as well. We should become a welfare economy then. Can we function as a country in that scenario? So we need to understand where Swami is coming from. I don't know, I haven't heard also this one. Everybody has the, if there are 1.4 billion plus people, 1.4 billion plus opinion actually. So everybody has got their own 2.8 sometimes. That's true. But other than the jovial aspect of it, tax is an inevitable, matter actually, ever since it has been introduced. So, for everything, there is a funeral tax, there is a this tax, that tax. A country has to offer, different kind of services to its citizens. Where the money is going to come from? See, certain countries have got certain asset to sell. After that, once they run through that, where the government is going to get the money to offer whatever services it has to offer to its wards? So, the tax has to be there. The question is then how much tax? Whether, lesser tax or more tax, that depends. That depends on the government, depending on their overall, budget and what income and what expenditure. So, if Swami says, I think somebody should ask him, sir, then how the whole economy will function, how the country will function. What is the, solution to that actually?
Hi, just on the the aspect of how evolving regulation is happening on tech-based industries. We're seeing in fintech, the RBI has released the SRO framework for self-regulation. We're seeing that in gaming after a lot of tug of war between various high courts taking different stances. It's again gone into self-regulatory as an option. Are we going to see in this government 3.0 more such, do you see that happening, that there'll be more self-regulatory frameworks for different industries, that the government will, I would say, allow delegated kind of powers to at least come up with norms, code of conducts, and do you see that in a positive shape as far as the investment climate is concerned?
I'm sure all of us might, or some of us at least, read that letter that the Prime Minister wrote after his retreat. So I thought two phrases there stuck in my mind, right? One was this phrase that basically he said, reform, perform, transform. And he said reform is the government's job, perform is the bureaucracy's job, and basically transform is that, he said Jan Bhagidari, if I remember right, the word he used. My Hindi is terrible. So basically I think therefore one should expect that will not stop. There is a lot more reform to be done, and therefore things like your SRO model for fintechs, maybe there'll be something SRO model for VCP also is something that we need. So I suspect we'll see more. And if I read that line along with the other line the Prime Minister used, which is basically he said speed, scale, scope and standards. I think therefore looking for standards would mean more such frameworks, more such systems, right? Not just in financial services regulation, but just in the country itself. Universities, for example, is another one. So there are so many such things. I would say generally speaking, as a country becomes more a developed economy, you should expect, as it is in most of those developed economies. I mean, starting with building codes. I mean, in many countries, the height of the switch from the floor at which point the electric switch is, if it's not at that particular height, the people get very upset about it, Whereas in our system, it's a very freedom-oriented, loving country. We fix it where we want. So I think yes.
Hi sir, myself Ganesh from iRobotics and Automation. Basically we are in robotics and automation business already. Now my question is, after hearing all three basic questions, the outcome. First, how India's growth, you said very well. Second, how we are in place versus China plus one policy, how we are benefit. Everyone has said, okay, geopolitically we are benefited. Now company like us, rather from conventional business, we are entering into new startup, like building robots in India. It's very new. Now how PE and VC industry, not only giving us a valuation and funding, but giving that exposure, as sir has mentioned, the Indian entrepreneur should travel across the globe and create a business and create value for the country. So how you are in place to support these startup system so people like us can be benefited at very fast pace.
Oh, look, this is an area in which we invest in, so I can specifically say about that. We have a specific fund which only invests into founders who are building enterprise-centric products and services, which is focused on global markets. And to answer your question specifically, what we do, and everybody have their own ways of doing this, we have a panel of 27 people. Many of them are investors with us, but they are also CXOs in large companies, whom we tap into for helping these companies. So for example, if someone like you become a portfolio company of ours, what happens is you want to go and hire a senior sales team in, say, US as a market. We can actually help you. We have, like the person who would be helping you in that case would be somebody who have run big sales force for Fortune 500 companies. So, and now I'm not saying this is just us, like I do see many other funds also in India who are building these kind of capabilities, where I would put that as BD, GTM, and capital. The one is business development, opening doors for customers. Second is GTM, which is finding partners and also right kind of executives who can help you grow globally, which is a network of people like us tend to have. And the third is capital, because the right kind of capital to help you grow. The kind of people who are looking for domestic India opportunities are different than the kind of people who would say, I like a robotic company which is building product in India, but for global markets. So there is all these three things which is being put, like, and I can name a few other funds, like Avatar does that, like, you know, my former colleagues in Peak 15, they actually have a program which does that. The folks in Lightspeed does that. So there is many of them who are actually doing that. And that population will continue to grow.
See, in our portfolio, we have been trying to help many companies to tap into the Middle Eastern market, actually. So, finding additional capital plus new markets, and some of them have been very, very successful, actually. So, I'm sure many other funds, as Anand alluded to, will be helping startup like yours find opportunities elsewhere. Yes.
Do we have any other questions?
Yeah, one more please. Hi, good morning everybody. Thank you for your time. This is Chetan from Incentive. At Incentive, we are building a discovery platform for the secondary market space in private companies, which you all spoke of and addressed to. Couple of questions. One is, what is the expectations of the secondary deal flow going forward? And second question is, what is the expectations from the financial ecosystem for a tech product like us, so that we can build a better product, which everybody can access?
See, on the secondary side, in India, we have been talking about secondary for over the last few years, but transactions are far and few. One issue is the mismatch between the expectation of the seller and the buyer, so the valuation issues, then the quality of the assets, etc. It is also a function of available secondary opportunities. One of the firms, US-based firm, wanted to invest into a $100 billion ticket size secondary opportunity. It's difficult to find it here. The reason is the secondary opportunity which is coming into the market now has been invested 5, 6, 7, 8 years before. At that time, the fund size has been, let's say, 100, 150, 200 million. And so there is not enough pool of secondary opportunities available. Like you hear in the US, this particular endowment sold $700 million of secondaries. So those things are not there yet in our country. So the evolution of secondary opportunities on the markets are, that's going to take time, actually. Nevertheless, it will happen. And onto the tech side, it's a good initiative because, those who are trying to get some liquidity, it's a good initiative to get into a tech platform where secondaries are listed, and if you have an automatic bid and ask kind of process, that will be helpful, yes.
My feeling is that this market is going to boom much faster. And I think I would, first of all, I would make maybe a gratuitous suggestion, and please feel free to discard it, is that do not think of yourself as a tech platform. Tech is incidental. It's essentially like saying you have chair, table, coffee in your office. I mean, who doesn't have tech? So I think the key thing is you have to be a market maker. The real need is what he said, which is fundamentally there are opportunities, they're not apparent, but you have to make market. So I think secondary is about market making, it's about talking to every fund, it's about funds taking a philosophy. For example, we have taken in our fourth fund, which is just starting, a philosophical change saying we're very open to buy secondaries, right? In the olden days, if we invested in secondaries, it's, oh, you're taking secondary, my God, it's terrible. Primary is basically like, punyam, and secondary is sort of not papam, but sort of somewhere in that direction, right? So now we are saying, no, we are absolutely willing to do pure secondary transaction in areas we like. So I think please think of yourself as a market maker. Second is keep talking to the regulator. Regulator is very keen to drive secondary market because as we know, a lake in which there is no inflow or outflow becomes a cesspool. So capital is like that. New capital will have to come, but old capital will have to exit the lake. So that's the nature of capital. So they are very, very keen in creating secondary markets, and there's a lot of conversation happening at various levels in the government on how do we create secondary markets. So just look at India as India. Don't worry too much about other countries and so forth. India will develop in its own way, and it will come. We are still backward in the journey on terms of size, but we are not backward in terms of thought. So I would say talk to the regulator as much and think of yourself as a market maker.
Incidentally, over the last 4 years, we have been doing secondaries. About 20% of our portfolio is secondary, both direct secondary as well as LP positions. We see, but small ticket size, like let's say 5-10 million kind of size, not big ticket size actually. But you have to understand where this secondary, opportunities are coming, where the demand, it's an evolutionary process. Again, see the average holding period of buyout in the US in the 2000 was about 3.5 years. Now it's closer to 7 years. And so is the PE. PE was about 3.3, now it's about 4.5, and so on the VC side. So the average holding period of investments across the board in all geographies have substantially gone up. So investors look for liquidity. And if in between there is a macro upside or policy issues, political change, then that period happens to get even further. So this is why secondaries, GP-led secondaries, LP-led secondaries, stripped asset sales, GP stake fund strategies, all these things are coming up. So I think as we move forward, there will be more and more opportunities because more and more capital is getting into this asset class. Exit has to happen. So you are in a good space. All the best.
I think everybody has said they are doing something on the secondary side. Every fund is doing and everybody is doing. But awareness is an important part actually. The market is not aware about that. What are the options available in the secondary, I think. So as he rightly told, the regulator can come in the play. And there can be more awareness so that the people who are, like I told the example of bank actually, they are not aware what to do actually because they have huge investment. So we need to keep some kind of, I think, awareness in the system, either through the regulator or through your own channel or through IBCA also, because IBCA is connected with all the funds actually. So it is an important part. Once this will happen, then a lot of new investors will also come. They will buy out in the secondary actually, rather they have not taken in the primary. They'll see they have a lot of funds actually, and the life cycle will be less also. So these can be the advantages.
I would have a suggestion to venture intelligence, like the way you guys do on the private equity side, venture side, investment, exit side. I think you should also start a column on secondary transactions. That will be helpful, yes.
Actually, you can predict it because you look at every fund's holding position and holding tenor. You can even say things are more than so much old, so on and so forth. Yeah. There's a lot of data. One thing you have and only you have. I always call him the Chitragupta of the Indian industry. So.
Yes.
Thank you very much for moderating.
Hello.
I had one last question, if you all have 2 minutes. Sure. Okay.
Hello. Yeah. Thank you so much for the feedback. I would request all the panelists to step forward for a group photo. I would now request Mr. Nagarajan, Managing Partner, Zenith HR, to come on stage and give away the mementos. We now have our networking break. Our next panel on private equity will start at 12. Thank you so much.